The AI boom is well and truly here, and it's sending some tech stocks soaring to new heights. But is AI hype turning into a market bubble that could come crashing down?
The AI will be able to do everything.
Challenges like artificial intelligence.
Incredible things that AI can do.
AI is so important.
But AI is still a long way off from solving a lot of the issues it's hoped to tackle, while remaining extremely costly to scale and develop. Then there's some debate over how much profit or added productivity these systems could ever possibly generate to justify the money being poured into them. So, could the AI boom end up being a bubble and a bust? Here's what you need to know. In 2020, the AI market was estimated at $93 billion. That's set to double in 2024. And by 2030, the market could be worth over $800 billion. For now, this growth is largely being driven by tech giants and AI startups heavily investing in the infrastructure and chips needed to build these systems.
The infrastructure has two things. A, it's costly. B, it uses a lot of energy. So while you have extremely good technology, the corporate money in terms of paying customers is still disappointing and definitely out of sync with the amount being invested.
Still, some companies have managed to make big money in the AI boom.
Everybody is so nice.
NVIDIA made its name making graphics cards for gaming, but recently it climbed the stock markets to become, briefly, the world's most valuable company. And its impressive run can be put down to its H100 and Blackwell chips that are industry leaders for powering AI systems.
As it turns out, the math that is required to do things like graphics rendering is very, very similar and applicable to the same kind of math that's used to do machine learning and artificial intelligence.
But in the highly competitive race to build AI models, the path for other companies to generate profit from this technology is a little unclear. And with AI capital expenditure forecast to reach $1 trillion in the coming years, some analysts are beginning to warn that the market dynamics are starting to look like a bubble.
A bubble occurs when the market value of assets decouple from the intrinsic economic value. It's the expectations of rising valuations that generate investor demand. Typical bubbles, so to say, both volume and valuations of investments expand rapidly. We can see that dramatically and just see and how companies building foundation models are valued right now.
In the tech sector, this bubble and bust scenario has precedent.
Environment that accesses the power of the internet.
The dot-com bubble developed in the late 90s, of a period that saw unprecedented growth in the IT and telecom sector, coupled with the proliferation of personal computers and the advent of the World Wide Web. Eager to capitalize on this new tech frontier, investors pumped money into online ventures and dot-com startups, driving up the valuation of businesses that had no clear path to profitability.
Oh, so none of these things work yet?
In early 2000, the failure of profits to materialize and higher interest rates triggered a panicked sell-off of dot-com shares. And by October 2002, the stock market had fallen 77% off its peak.
You clearly see in the AI sector the same thing. You see, lots of investments flowing into things and people, it's not quite as bad as in the dot-com bubble. In the late stage of the dot-com bubble, everybody in the industry was fully aware there was a bubble. You just didn't fully know when it would collapse.
I think really what you'll see is there start to be a division between companies that have business plans that really fundamentally make sense, and then a second set of companies that were trying to capitalize on sort of, internet fever.
Then again, the dot-com crash didn't exactly halt the march of the internet. Some of the largest companies in the world were born in the dot-com boom. And the internet has transformed our lives. There's every chance AI may end up going a similar route.
Bubbles who are investment-based and who foster innovation are not bad for the economy per se. That's how we build railways. That's how we build the internet infrastructure and so on. AI is by far the most transformative development I've seen in my lifetime. And it's clearly we wouldn't have that speed of innovation without that amount of investment. So I think ultimately it's a productive bubble. Now, when it bursts, will you have a hangover? Yes, you will. Will it stabilize the entire economy? I can't imagine how.